Hello, everyone. I am Nicolas Bornozis, President of Capital Inc., and it is our pleasure to welcome today Mr. Eddie Valentis, the CEO of Pyxis Tankers. The company currently owns a modern fleet of 6 mid-sized eco-vessels, which are engaged in the seaborne transportation of a broad range of refined petroleum products and dry bulk commodities, and consists of 3 MR product tankers, 1 Kamsarmax bulk carrier, and controlling interests in 2 dry bulk joint ventures of a sister ship Kamsarmax and an Ultramax. Pyxis common shares are traded on the NASDAQ capital markets under the ticker symbol PXS. Now, before we begin, please note that this discussion is for informational and educational purposes only and should not be considered investment advice or advice of any kind or an offer to buy and sell securities. And as an additional disclosure, Capital Inc. is very proud to work with Pyxis Tankers on investor relations. So, Eddie, thank you very much for joining us again. We appreciate you taking the time to be with us today following the company's first quarter 2025 earnings release. It is a great opportunity to follow up with you on key developments, get your insights into market trends, and hear more about Pyxis Tankers' strategy moving forward. So let me welcome you and ask you the first question regarding the first quarter reflections. To start, what are the key takeaways from Q1 2025 and that you believe investors should focus on? How do these results position Pyxis for the remainder of the year?
Thank you, Nicolas. Thank you for having me. Thank you for your time. And it's a pleasure to talk to you. You know the business, and it's always a very good discussion. Regarding your question, I think, obviously Q1 was softer than the previous year, but we have managed well through very challenging times. Our TC revenues were approximately 8.4 million, our adjusted EBITDA 3.5 million. Our earnings per share was 7 cents, but I repeat, it was much lower than the Q1 of 2024. Still a solid first quarter, especially for the MRs, which were averaging approximately $23,600 per day.
Thank you, Eddie. Let me now focus on one of the key developments of your strategy, the Pyxis Tankers approach to diversification. How has this diversification strategy worked for Pyxis? You're active now in 2 segments, dry bulk and product tankers. Are you likely to expand more in these sectors, or would you consider another sector? And by the way, I wanted to point out, it's interesting to note that more companies now are publicly listed, are following the approach of diversifying across several sectors, as opposed to the usual pure play one sector model that we have seen so far.
Yeah, that's interesting what you're mentioning, Nicolas, because the story when we became public was pure play. Now, as you say, more companies are diversifying. They see the benefits of having mixed fleets, considering that segments do not always coincide in good and bad markets. Therefore, it makes sense to have a diversified fleet. And for us, it was a very big discussion and very big consideration when we decided to enter the dry bulk. But since we had the know-how in the dry bulk business, it made sense at that stage, since also the asset values at that point were very high in tankers, it made sense for us to diversify in the dry bulk space. As you know, we started in the fall of 2023. We acquired the Japanese-built scrubber-fitted Ultramax, and then we continued with the purchase of 2 Kamsarmaxes and a very good shipyard in China. And I must stress that because it's very important. We hear a lot of stories about Chinese-built vessels, and in that respect, I must say that this is very unfair for the industry to be discriminating against Chinese-built vessels, which in our view, considering our experience, are very good quality vessels. And I hope that the decisions regarding the Chinese-built vessels and the tariffs imposed on them, or the penalties imposed on them, it's not the tariffs, at the end of the day will not take place.
Thank you, Eddie. Now, let me go to your capital allocation, the long-term capital allocation. Now, you have strong liquidity. Your share buyback program expired. So how do you approach capital allocation in 2025? Specifically, you're dealing with a number of issues: cost structure, interest rate exposure. You have a new banking facility allowing you to grow. So how do you plan to?
Thank you for the question. Yes, 2024 was a very interesting year for us. At the end of the year of 2024, we completed our common repurchase program, our common shares repurchase program, was after the full redemption of the convertible preferred stock in 2024. So in total, we spent approximately 13 million to eliminate potential dilution of over 2.5 million Pyxis shares, which is almost 20% on a diluted basis. So beyond the pursuit of vessel purchases, we continue our dry dock programs. This spring, we passed our two Kamsarmax through the second special survey. And also in Q4, we have another dry docking for one of our tankers, the Pyxis Carteria. And we estimate overall to undergo the intermediate survey plus dry docking at approximately 900,000. So in any case, of course, we always repay our debt and support our operations, which, you know, considering the volatility of the market, nobody knows how the market will evolve in the next 6 months.
Well, I have a question further down on fleet expansion and so on, but I think it's worth mentioning that the new banking facility that we have in place now allows you the optionality for growth.
Yeah, we were very lucky and very fortunate to have a good relationship with a certain bank in Greece. And we got a very nice facility and a hunting license, you may call it, 45 million. So whenever, I mean, we are looking into opportunities to expand. So this facility gives us, let's say, a flexibility to move faster in case we find an opportunity to acquire tonnage, which of course will be in the segments that we're focusing. So if you're asking which segments are that, it's the middle-sized segments. In the tankers, obviously, it's the MR sector, which has been for us the main tanker segment that we follow. And for the dry bulk segments, we look at, again, Ultramaxes up to Kamsarmaxes vessels.
And the MRs, as we have pointed out many times, is the workhorse of the industry.
It's proven to be the workhorse of the industry. I know this is very common, a common thing to say, but we've seen stability and we've seen not, you know, the exceptional rates that the larger vessels might see, but we've seen a steady market, and we've seen good returns over the past 3 years, exceptional returns for the past 3 years, considering historical averages.
So now let me go to the next question. The impact of geopolitical events on trade shifts and fleet activity. Mm-hmm. Obviously, we are in an environment where geopolitical considerations play a major role. How have these influenced so far the product tanker market and the dry bulk market? Have you responded in terms of fleet deployment to these challenges in any way?
I'm sure that it's, you know, everybody who is discussing about the market and the last 3 years, everybody has mentioned that the geopolitics has been the driving force behind the strong charter rates that we've seen, especially for the tankers. Of course, the conflict between Russia and Ukraine, the Middle East situation and how it involved with the Houthi attacks and the crossings in the Suez Canal, all this has added a substantial ton-miles, and therefore the distances that we cover are longer than they used to be. Considering also the embargo on Russian oil products, this has been very beneficial for the tanker market. Now, going forward, I mean, geopolitics always play a role. There's a big discussion whether the conflict between Russia and Ukraine will end and how that will affect the market. But I think it's too soon to predict anything about geopolitics because we never know what will happen today. I mean, the world is very fluid. Everything is changing. So we also have the tariff implementation, which we don't know exactly how this will move. We've seen China slowing down tremendously their imports. I think everybody's waiting to see how this tariff, the new tariff environment will play out. So although I would like to say something, and predict the future and tell you something very positive, I'm not in that position. I think nobody's in that position. You see the volatility not only in the shipping markets, but in every market, there is volatility.
Absolutely. I mean, it's very difficult to make predictions in this environment. But still, if you don't mind, let me ask you, when you look at on the demand side of dry bulk and tankers, how do you see the sector evolving?
Yes. Again, let's discuss the issue of the tariffs and how this affected the demand. I mean, there have been revisions in the growth forecast, and I think if you're considering various organizations, they all say that global economic activity has slowed down. So the IMF, for instance, lowered its forecasted annual global growth rate to approximately 2.9% for 2025 and 2026. At the same time, let's not forget that the fleet will be growing, and it's growing substantially. The order book is big. I'm sorry to say that, but the supply will be substantial over the next 2 years, both in the tanker and the dry bulk segments. And specifically for the dry bulk segment, we believe that the supply will be substantially over the expected demand. So this is how things look today. Of course, there are always situations which change things, and we've seen that in the past. And one of the factors that might change things is the geopolitics, how the tariff situation will affect imports, and how they will affect, again, the demand, the distances, the ton-mile demand. So it's all, again, fluid, although everything is pointing out as a softer market. But you never know what will play out in shipping. Shipping is very unpredictable.
We opened the door to the next question on the supply side, the fleet growth. And now we see that deliveries, as you mentioned, are set to rise. Scrapping remains subdued. But still, I think you have the aging of the fleet. And in this environment, modern vessels like the ones you have provide you with a competitive advantage, whereas older tonnage may be running into issues. So
that is absolutely correct, especially for the product tanker segment, the MRs. We estimate that the vessels that are above 20 years of age are approximately 18% of the fleet. So considering that the total order book of the space is approximately 16-17%, so supposing these vessels go for scrapping, we see that there will be a balanced market. Demand for product tankers is steady, and okay, maybe it's declining today, but it's still steady. It's a steady market. So we haven't seen anything substantial happening in the market. So overall, for the product tanker segment, we are positive because we see that there will be a balance. But again, I repeat, subject to the older vessels being uncompetitive and going for scrap. Yes, you point out something very important. We have an eco fleet, and we try to differentiate even our first generation eco vessels as we speak. And I told you about the last 2 dry dockings. We have installed fuel saving devices on board on these 2 vessels, and we will install extra fuel saving devices also on the next tanker that is coming for dry dock at the end of the year. So we're doing the very best we can in order to be competitive and lower our carbon emissions.
And I think, Eddie, that with the IMO regulations kicking in as of October, that will provide quite a disadvantage for the older tonnage.
Yes, definitely. Yes, there are new technologies that are coming, new fuels, etc. But the existing fleet needs to be very competitive, and this is how, I mean, we sold all our older vessels during the last years. So we believe that we have a modern fleet, eco fleet, and this is the way we are looking at for the future.
So that opens the door to the next question. You've already talked about how you optimize your fleet strategy, upgrades. Let me ask you, in terms of expansion now, you already alluded that you have a hunting license. You're looking for new opportunities. How are you going to go about them, aligning with regulatory and market trends while preserving capital discipline?
Well, yes, we've proven to the market that we have been very prudent over the past years. We have built up our cash reserves. We are, in a position to withhold any adverse market conditions, and at the same time take advantage of opportunities that might come. As I mentioned earlier, the segments that we're looking are specific. We want to be specializing in the middle size vessels, MRs, Ultramaxes, Kamsarmaxes, and this is what we will be looking. Now, whether that will happen in the next 3 months, in the next six months, the next year, I don't know, I cannot say that, because we're always evaluating and we always consider each proposal, whether it makes sense or not, and whether it's accretive for our shareholder base. So we always look to maximize our shareholder value. And that's what we will continue to do prudently, as we have done in the past.
So Eddie, we all operate, actually you are all operating in an environment full of challenges. Challenges in shipping are ever present, but challenges also create opportunities. So if I can ask you, when you look at the broader market and of course at Pyxis, what are the opportunities and challenges that you're thinking of?
Listen, I mean, we're a shipping company. We would like always to consider that we have an entry point which is comfortable. And I guess the secret for success in shipping is for your entry point to always be at a reasonable level, considering the historic averages, etc. So opportunities will come, and we'll always evaluate them, as I said earlier. But I cannot say that specifically today we look at this opportunity, because I don't see any opportunities around as we speak. The market is very volatile. There's uncertainty about what will happen. Maybe the Middle East war will end. Maybe the Suez Canal will open. But again, nobody knows what will happen with Iran, except for with the Houthis, etc. So everything is an equation which nobody has an actual solution and an actual strategy to follow in this market. What we will do on a case-by-case basis, whether it makes sense financially and whether it makes sense quality-wise, we will pursue it, and we will make our moves when the time is right.
But in this environment, as you have pointed out in your announcements, you have significant capital resources in place. You have a competitive cost structure, strong customer relationships, and of course, experienced management. So, in a modern fleet. So that positions you well for the current environment.
Yes. Let's face it, the company is small. It's a small company, but as you say, we're well placed. We have a very good reputation. Operationally, we work with the majors, with major charterers, and I think we have a stellar performance, and everybody knows that. We would like to keep it this way. We always look at quality, and we always look at safety, and this is the way we will continue to operate. Let's hope that the market gives us the opportunity to grow, as we always envisioned to grow. But again, let me start, let's say, complaining a bit about our stock price. Our stock price is very much below what it should be. It's a very cheap stock. At this environment, obviously, we cannot do any sort of equity placement. So we really stress this point that I think we are trading way below what we should be trading at. And this is very disappointing, Nicolas, really. I hate to mention it because I seem to be always complaining about the share price, but this is the truth. We are way below, I'm repeating, way below what the stock price should be trading at.
Actually, Eddie, I'm glad that you mentioned it, because we have had a number of discussions with the CEOs like yourself, and everyone exactly focused on that point, the value dislocation, for shipping stocks. And I think when you think about it, it makes no sense why this should be, and hopefully, we can all educate the market, because this dislocation is unreasonable.
It is, and we really hope, and we really, we look into you guys who really pass the message to the investor base that shipping is a really undervalued industry. We should have been trading at way above today's levels. It doesn't make sense. In any case, we're there. We try to pass the message whenever I can. I'm now in New York. I'm meeting with certain investors and certain shareholders. So we're passing the message that yes, in good times and in bad times, shipping is there. Good quality companies should be rewarded for their the quality of the services they provide, and running their management the way they do. So we would appreciate that investors take that message, and let's hope that our stock prices will start to appreciate soon.
I think it's important for investors and for everybody to realize the critical function of shipping as part of the global supply chain. And shipping is an industrial activity. So hopefully, exactly, if you position shipping the right way, as it already functions in the global value chain, hopefully it will have a different position in global portfolios.
Yes, we are considered an industry which belongs to the old economy. What is old economy? 90% of all the goods, commodities, etc., are transported in the shipping vessels. The investments that are made into the shipping sector are tremendous. The numbers that are, everybody's paying for new vessels, new technology, upgrades, etc., amazing. We're not talking about an old economy sector. We're talking about a strong, dynamic industry which needs to be supported.
Eddie, let me repeat something that I said in another interview. I don't remember who said that about shipping, but the person said that if shipping ever goes on strike, half of the world would freeze and the other half would starve.
Yeah, there's a very interesting video clip made by the Union of Greek Shipowners, which exactly shows what will happen in case shipping stops just for, let's say, a 3-month period. What will happen to the world if goods are not moved the way they are moved today?
So coming to the close of our discussion, if I can ask you for your strategic vision and for the value proposition of Pyxis today compared to the past, what is the closing message we can leave with our audience?
I think we've said it throughout the interview. I stressed the important points. Besides the stock being substantially undervalued, our track record is stellar. We've been providing very good returns. The last 3 years have been amazing for us. We've restructured the debt. We repaid our convertible. We've built up our cash reserves. We've lowered our borrowing costs. We're ready to expand. We have the facility, the lending facility already in place, although we don't have an actual candidate, but the facility is already in place. And of course, the management has a very good know-how of the industry and has substantial skin in the game. Let's not forget that. The management has substantial skin in the game. Our interests are closely aligned with those of our shareholders.
Eddie, if I can ask you, given the fact that, as you pointed out yourself, you are a smaller company compared to the larger peers, does that provide a different value proposition or a different advantage to investors who look at your company?
Yes, Nicolas. I mean, the proposal here is that obviously we're a growth story. We're looking for opportunities to grow. And also, we've proven to the market that we have done a very good job operationally. If you look at our operating expenses, are equal or even below those of much bigger companies than ourselves. So that proves that the small company can be as competitive as the bigger companies can be. On the other hand, we have substantial cash flows, cash reserves. We are ready to move. We have the loan facility in place. And therefore, we are able to take advantage of opportunities whenever they come. Also, lastly, and most importantly, the stock is very much undervalued. We trade at a significant discount. So I think it's a very good value proposition.
Thank you very much. That brings us to the close of our discussion. Thank you for joining us today. Thank you for sharing your insights on the dry bulk sector, the product tanker sector, and of course on Pyxis Tankers. I'd like to mention that this full interview will be available at www.capitallinkwebinars.com, on Capital Link's YouTube channel, and will be shared through our channels. We look forward to having you again with us in the future. And again, thank you for being with us.
Nicolas, we really appreciate and thank you for your support.